Thank you very much for creating time.
Thank you.
And a happy new year, I guess, because this is the very first time we get to host you after last year. And a very interesting conversation that we want to look into. You've been on the forefront for women empowerment, but this leave no woman behind. What does it necessarily mean?
It means what it says. So we are talking about the constituency, the majority constituency of what we do, of our countries. So women, especially in Rwanda, there are more women than men. That's one. But worldwide, it's one of the Sustainable Development Goals, SDGs, SDG 5 actually, on gender equality. So this year's theme was focusing on not leaving any woman behind in terms of financial inclusion. So they are always left behind in many issues. In Rwanda, we've been making a lot of progress, I think, in different areas. But us as stock exchanges, we have been part of this bigger initiative of the United Nations in partnership with UNTAC and SE. It's called Sustainable Securities Exchange Initiative since 2015, which basically, requires the stock exchanges to be part and parcel of this gender equality issue. So for us, we are fostering that. We are promoting the gender equality, especially reducing the gap between men and women in the workforce.
Interesting, Celestin. Now, this is not the very first time that you're doing this. You mentioned since 2015, and you're working hand in hand to reduce the gender gap with financial inclusion at the spotlight. Just have you been able to track this development as of since then?
Well, not systematically per se, but there are different initiatives. One of them is something initiated by women organizations under the UN. The seal, there's a seal where they are going to be, tracking what people do, and you get like a certification of how you are doing on that. So that initiative in Rwanda is being worked on with the office in the Prime Minister's office and the other stakeholders. But within our workforce, we try to encourage companies to do the same. So, but anyway, at the end of the day, what we are trying to do is it's not charity. Women are able.
Definitely.
We know that. Research has shown that. Research has shown that they are able, better managers in most instances than men, and they are better savers. We have translated that actually in Rwanda. We have seen that are already happening. Oh, yeah? If you look at women's participation, for example, in government bonds participation, which has been increasing, you see the bonds market has been growing slightly.
Actually, we saw faster 448 traded value as of February. That was
those are numbers of trading, but the uptake actually right now, what we are seeing in the numbers, the retail investors for the first time in Rwanda, they were above 7%. Wow. So when you look at the statistics breakdown, you realize that women are taking the lion's share, 67%. No, 75% actually. When you go to the numbers, that is in volume. When you go to the numbers now, the actual numbers in terms of participation, those who are participating is about 65%. So they are growing. And the retail investors are growing, but the women are growing even faster than men. That is in terms of participation, in terms of investments in these markets of ours, in the retail market section. However, what we are trying to say is that, we try to bridge the gap for them being in positions of power, not only in parliament, because the Rwandan parliament, is the first one.
Definitely.
Government, even cabinet, there are more numbers.
Percentage.
But now, as stock market people, we try to increase that also in governance arena, where we try to make sure that they also participate in decision making. But now, this year, we want also to be included in terms of access to credit, access to financial services at large, and so on and so forth. And the progress has been quite remarkable so far.
Thank you very much on the same. Now, we do understand that is one of your campaigns that you're actually having at the stock exchange, but another one that you have been engaged so much with and you put a lot of effort in is empowering SMEs. How worthwhile is this for the securities here in Rwanda, and how we yet to see some SMEs maybe listing on the alternative stocks?
Well, I think, for the SMEs it's also the same, because when you think about it, it's the same goes like women. There are more. you cannot ignore more than 50% of your constituency.
Definitely.
For the SMEs, it's even worse. The SMEs are more than 95%
of
businesses
the jobs
in Rwanda.
that are actually created here.
So, and the jobs, all metrics you look at, SMEs are dominating in how we do in business in Rwanda. And so far, they all cry about access to finance. And we all know that money is not the problem. Actually, money is how you access it and where you access it, and there are conditions to that. So for us in the capital markets, we started with the blue chip companies from the beginnings because of creating the confidence in the market, the governance and accountability. It's better for bigger companies. But for the other lower end of the segment of our businesses, it's SMEs, startups, and some other corporates which are mid-size. So now, if you don't address their issues, the banks are trying, the NGOs are trying, government has tried so many times. Now we are saying, you know what, we can add our value in the capital markets. The number one value we have, it's not about money alone. It's about governance and accountability. Okay. So we want to help these SMEs to first of all get their house in order, telling them the money you get from capital market or even for any bank is not your money, it belongs to the company. So
that
those are
brings
some of the
me
things
to
we
a
want to
quote
tell
that you
them.
actually said that when you save, you can actually build your dream house, the dream home. And that was in line with the SMEs when you that was sometimes in January, 28th, I guess, January. But let me drive now this conversation back to what we saw from the listings. Now, we did see I&M listing last year around February. Now, this marks our full year on the stock exchange. Sure. And their results came out last night. Today they had a presser, spoke to the journalists. Celestin, as the Chief Executive Officer of the Rwanda Stock Exchange, have you seen I&M stocks have an impact to the bosses?
Well, I think, it's an addition. It's one more product on a small exchange. That's one thing. So if you get one company adding 2, 3 local companies existing, that's already 1/3, 1/4 actually of the business listed on the stock exchange. That's already one impact. The second one, you add on more investors onto the grid. So you get growth in more people who are joining the market in terms of retail investors and some institutional investors who join the market. We've seen that. The volumes have increased alongside. Last year, we had more volumes than we had in 2016. We grew more than we had done in 2016. And we are seeing the trends continuing. Even the IPO that came in from the I&M Bank, the share price is still up. And the company has shown again, even today, strong results. But, markets are always anticipating what is going to happen. So, and the results that we have seen today, the growth of the company, the bank, they don't seem, they have grown. I mean, all metrics of of making money are there. Profitability, the customer deposits, you look at proposed dividend also has increased around
40% on the dividend.
Yeah, the profit for the year also has increased. So all these things are pointing to the right stuff, for the right metrics of any institution, later on a bank. So I think even the NPLs, they are doing quite okay below the central bank benchmarks. So all the metrics, they are breaking them. And that's a positive thing, I think, for the bank. And the market has kind of anticipated that, I think, and they have been pricing in all those expectations. Because before the company, publishes their results for 2017, the whole year, in March, they had published, the 9 months already. So the market knows what is happening. Yeah. If they see you are doing well already 9 months, they don't expect you to just have a sharp drop in the remaining 3 months. So those are some of the things that investors consider. And remember, the markets are smart. They are always looking out for any information. The economic results have been good. We've just seen the statistics on the larger economy of Rwanda, and we have just now also saw the monetary policy statement last week. So all those positive results are being shown, and economy continues to be resilient. So the economy beating expectations, the bank making money this way. So the trends are they seem to be just fine for now. Allow
me to ask you one last question, Celestin. Give me a comparison from February last year to February this year, because at least we have the figures already. How have the markets been performing during this time?
I would say that the equities markets have been a bit slower than last year in terms of volumes. The volumes have gone down really significantly. between January and February compared to last year. So overall, we have the volumes reducing on equity side, but if you go to the bond side, you realize that they have gone up. So it's a mix of those, but again, we are still early in the year. Liquidity issues come into play, people waiting to see how companies have performed really, and things like that. And also issuance of government bonds which have come. We saw some appetite from them. We had an issue, a government bond which came on the market mid-February. So people are holding on to their cash when they are waiting for something like that. And they anticipate, they know that thing is coming, so they wait for that. And we've seen participation was quite high. I mean, there was a serious oversubscription. 15 and 40 billion. I mean, it's a lot of subscription, more than double what the money was being looked for. So I think going forward, we just wait and see what happens the rest of the year.
Finally, every time we see the government bonds being listed at the stock exchange, we do see that it's either for infrastructure development and also strengthening the capital markets. What do you have to say about this? Just a little insight on the same.
You know, you must remember, you know, these bonds being floated on the market, it has two reasons to it mainly. One is to go into the normal budget. You know, a part of the budget of the government mainly, there is the domestic resources, there is the external finance, and there's also the normal borrowing. So they borrow domestically. So one of the ways the government borrows the most domestically, they go into they tap into the capital markets. So by tapping into the capital markets, it's good for the market itself, for deepening it. It's very good. But remember, it's all part of the government budget, which is approved by Parliament. And so you beat two birds with one stone. You get the budget you are looking for, cheaper, definitely. I mean, money from the capital markets are always cheaper. And you also help develop the capital markets. So it's beating two birds with one stone.
It's a bit of a win-win situation.
It's a win-win situation for everyone.